She doesn't seem to be hearing what we are saying.
Good morning, Mr. Governor.
Yes, good morning,
everyone. Yes,
good morning.
Can we start? Can we start, sir?
Yes, go ahead.
All right. This is the press conference following the 95th regular meeting of the Monetary Policy Committee of the Bank of Ghana. The governor and chairman of the MPC is ready with his statement. And so we'll go straight to him. And after that, the media will be able to ask questions as we always do. And this is live on Facebook. So just keep following us and following the governor deliver his statement. Mr. Governor, over to you.
Okay, thank you very much, AC. Good morning, ladies and gentlemen of the media, and welcome to the 95th Monetary Policy Committee press briefing. The MPC met last week and deliberated on the recent global and domestic economic conditions, as well as reviewed the latest macroeconomic projections. I present highlights of the discussions and the subsequent positioning of the monetary policy rate. The COVID-19 pandemic has continued to weaken global economic conditions, and growth projections have worsened since the last Monetary Policy Committee meeting. The IMF has revised downwards its initial global growth forecast from a contraction of 3% to 4.9% in its June release of the World Economic Outlook update. The pandemic has a more negative impact in the first half of 2020 than originally anticipated, and the recovery is projected to be more gradual than previously projected. Global financial markets have eased somewhat, reflecting decisive monetary, financial, and fiscal policy actions which have helped stabilize investor sentiments. Confidence indicators are beginning to show signs of improvement, although still below pre-pandemic levels, especially in countries that have successfully slowed the pace of COVID-19 infections. Notwithstanding these signs of early bounce back, lingering concerns of a second wave of the pandemic seem to be weighing on risk sentiments, with implications for borrowing costs, currency stability, and rising debt levels. The outlook for the global economy remains uncertain, despite these early encouraging signs of recovery. Signs of second wave of infections and intensification of the pandemic in other countries is sparking fears of a reimposition of restrictions and containment measures, leading to a further slowdown in the world economy. Global inflationary pressures remain subdued, reflecting low energy prices and sharp drops in real GDP, with significant slackness in labor market conditions. Core inflation remains low in advanced economies, and inflation projections have generally been revised downwards in the near term. In emerging market and developing economies, the inflation dynamics will continue to depend on the direction of movement of the exchange rate and the impact of the COVID-19 on food prices. On the domestic scene, there has been some pressures on headline inflation. After remaining flat at 7.8% in the first quarter, inflation jumped to 11.2% in the second quarter. This sharp increase was driven in large part by food prices, which spiked in response to the panic buying episode preceding the partial lockdown that was announced at the end of March 2020. Food prices continue to increase from 8.4% at the end of the first quarter to 13.9% at the end of the second quarter. Non-food inflation also rose from 7.4% to 9.2%, but this has been at a much slower pace than food prices. The sharp rise in inflation in the second quarter has somehow disrupted the disinflation process with the potential of prolonging the time horizon for reaching steady state inflation. Inflation expectations of the financial sector, businesses, and consumers have all trended upwards. The latest data from the Ghana Statistical Service point to a moderation in the pace of economic growth. The latest growth outturn showed that the first quarter growth recorded 4.9% compared to 6.7% in the same period of last year. Non-oil growth also slowed to 4.9% from 6% in the same comparative period. The services, agriculture, and manufacturing sectors contributed positively to the observed growth. The Bank of Ghana's Composite Index of Economic Activity contracted sharply by 10.6% in May 2020 compared to 5.6% growth in May 2019. High-frequency data shows that the contraction was broad-based and reflects the impact of the COVID-19 pandemic on the general economy. Industrial consumption of electricity fell as manufacturing companies worked below capacity, while tourist arrivals have virtually remained at a standstill due to the border closures and travel restrictions. Imports, domestic VAT, and exports have all been impacted negatively. However, port activity, domestic bank credit to the private sector, and social security contributions are beginning to record some modest gains, a sign of some early green shoots. The business and consumer confidence surveys conducted in June show some modest improvement in sentiment, although the level of the indices remained below pre-pandemic levels. Low consumer demand and effects of border closure on businesses were cited as the key concerns for businesses. The pace of growth in broad money supply moderated in June 2020, consistent with a slowdown in economic activities. Annual growth in M2 Plus declined to 20.1% compared with 22.1% in the corresponding period of 2019. The moderation in the growth of total liquidity was driven by the significant decline in net foreign assets to 6.2% from 22.5% over the same comparative period. In terms of components, the growth in M2 Plus reflected mainly in currency outside banks and domestic deposits. Deposit bank credit to private sector slowed in June 2020 on account of elevated default risks and moderated demand for credit, reflecting the impact of the COVID-19 pandemic on the real sector. Annual growth in private sector credit declined to 12.4% in June 2020, compared with 16.8% growth in the same period of 2019. In real terms, private sector credit expanded marginally by 1.2% compared to 8.6% in June 2019. The three major sector beneficiaries were services, transport, storage, and communication, and agriculture, forestry, and fishing, which together accounted for 94.1% of the credit flow over the 12-month period to June 2020. The latest credit conditions survey for June 2020 showed a net ease in overall credit stance on loans to enterprises, following previous tight stance reported in April. In contrast, Credit stance on loans to households tightened during that same period. Banks are projecting a net ease in the credit stance on household loans, along with further easing in the credit stance on loans to enterprises in the next 2 months. In line with this, new advances grew by 30.4% year-on-year to 15.8 billion by the end of June 2020. Interest rates on the money market reflected downward trends at the short end and mixed trends at the medium to long-term segments of the market. The 91-day Treasury bill rate declined to about 14% in June from 14.8% a year ago. Similarly, the interest rate on the 182-day instrument declined to 14.1% from 15.2%. Rates on the 2-year, 3-year, and 5-year instruments decreased marginally to 18.8%, 18.9%, and 19.3%, respectively, from 19.8%, 19.7%, and 19.8%. Yields on the 6-year, 10-year, 7-year, and 10-year, 15-year bonds remained unchanged at 21%, 16.3%, 19.8%, and 19.8%, respectively. Yield on the 20-year instrument, however, moved up from 20.3% from September 2019 to 21.5% in June 2020. The weighted average interbank lending rate, that is the rate at which commercial banks lend to each other, declined to 13.8% in June from 15.2% in the corresponding period of 2019, reflecting the monetary policy easing measures to inject liquidity into the banking system. In a similar direction, average lending rates of banks declined from 24.1% to about 22% over the same comparative period. Prices of key export commodities traded mixed in the first half of 2020. The declines in the export prices of cocoa and crude oil were partially offset by higher gold prices. From the beginning of the year to June 2020, crude oil prices contracted by 37.5% on the back of low demand due to the COVID-19 pandemic, while gold prices increased by 17.1%. The surge in gold prices was attributed to global monetary policy easing, geopolitical risks, and global economic slowdown due to the COVID-19 pandemic. Cocoa prices contracted by 7.7%, occasioned by low demand for the bean. These developments, especially lower crude oil prices, impacted adversely on the external sector. In the first half of 2020, total exports contracted by 8.4% year-on-year to $7.4 billion, driven mainly by the sharp decline in crude oil exports. In detail, crude oil exports sharply contracted by 37.9% year-on-year, while gold export receipts went up by 6.9%, and cocoa exports was up 8.7%. Similarly, total imports contracted by 4.1% to $6.4 billion on account of a 26.4% contraction in oil and gas imports, which is in line with slowing economic activity. These developments resulted in a lower trade surplus of $952.7 million compared to $1.4 billion recorded for the same period of 2019. The current account deficit for the first half of 2020, however, improved marginally from a deficit of $661.1 million a year ago to a deficit of $556.3 million. The current account outturn was supported by relatively stable inflows in net current transfers, especially remittances, together with significant decline in net investment income outflows, notably profits and dividend outflows. This, together with inflows into the capital and financial account, resulted in a near zero overall balance compared with a surplus of 1.3 billion over the same period in 2019. Gross international reserves stood at 9.2 billion US dollars at the end of June 2020, providing cover for 4.3 months of imports of goods and services, compared with 8.4 billion US dollars, equivalent to 4 months of import cover recorded at the end of December 2019. The strong foreign exchange reserve position has helped ensure stability in the foreign exchange market, with the local currency depreciating by 2.5% against the US dollar in the year to 23rd July 2020. The comparative depreciation was 8.3% a year ago. The execution of the budget for the first half of the year has been adversely affected by the COVID-19 pandemic through a combination of revenue underperformance and fast-paced spending. Half-year results indicate an overall budget deficit of 6.3% of GDP against a target of 3% of GDP. Revenue sources such as taxes on income and property, taxes on goods and services, international trade taxes, and non-tax revenue have all underperformed. On the expenditure side, employee compensation and other COVID-related expenditures have been the main sources of pressure. The mid-year budget review has therefore revised upwards the overall budget deficit target to 11.4% of GDP by end year, from the earlier target of 4.7% of GDP, reflecting an additional 6.7% of GDP attributable to both direct and indirect COVID-19 impact. This means that total revenue and grants for the year 2020 have been revised downward to 53.7 billion Ghana cedis from the initial target of 67.1 billion Ghana cedis, while expenditure and arrears clearance is projected to rise to 97.7 billion Ghana cedis from the earlier target of 86 billion Ghana cedis. The primary balance is also projected at a deficit of 4.6% of GDP from the initial target of a surplus of 0.7% of GDP. The elevated fiscal deficit path has impacted the stock of public debt, which rose to 67% of GDP at the end of June 2020, compared with 62.4% of GDP at the end of December 2019. Of the total debt stock, domestic debt was 122.1 billion Ghana cedis, while external debt was 136.3 billion Ghana cedis. Banking sector data as of June 2020 continue to show robust performance, despite the emerging risks posed by the pandemic on the sector's operations. Weaknesses in key financial performance indicators observed in the first quarter of 2020 seem to have improved somewhat in the second quarter in response to the various policy measures announced by the Bank of Ghana in March and May 2020. Although the financial soundness indicators remain strong, the industry's profitability performance has been adversely impacted by higher operational costs due to measures being put in place to limit the impact of the pandemic on banks' operations. These measures are to ensure business continuity and higher loan loss provisions due to repayment challenges by clients who have been severely affected by COVID-19. Sectors mostly affected by the pandemic and consequently loan repayment to the banks and SDI includes the services, commerce, finance, and manufacturing sectors. These conditions have heightened the risk of loan default in the banking sector and is pushing non-performing loans up. Total asset base of the banking industry continues to remain strong, with the total asset base expanding by 23.2% in year-on-year terms to 139 billion Ghana cedis at the end of June 2020. The data shows that recoveries from loans, a significant increase in deposits growth, and borrowing from parent companies have funded banks' investments. While these factors, in addition to regulatory reliefs provided earlier in the year by the Bank of Ghana, have supported lending to the rest of the economy. There are indications of a gradual rebound in credit growth in response to the previously announced policy measures aimed at supporting credit expansion and loan restructuring in response to the pandemic's impact on local businesses. Results of the latest stress tests conducted by the bank in July 2020 are reassuring and indicate that banks are well positioned to withstand moderate liquidity and credit shocks due to the existence of strong capital buffers. In a typical scenario of a credit default leading to the emergence of higher NPLs, the stress test results showed that the necessary provisioning could be comfortably absorbed through banks' capital buffers, with no significant reduction in capital adequacy levels. To summarize, the Monetary Policy Committee noted that uncertainties in the global economy has increased, although investor uneasiness has improved somewhat. The uncertainty derives from a possibility of a prolonged downturn as countries begin to experience a second wave of COVID-19 infections. Consequently, the fiscal and monetary stimulus packages will have to be continued over a much longer horizon, which could lead to a negative spillover to emerging and frontier markets with consequences for weaker growth and instability. The spillover of weak global demand conditions on the domestic economy will negatively impact exports, foreign direct investments, remittance flows, and domestic growth conditions. The most recent data on the Ghanaian economy shows that the pandemic has impacted adversely, resulting in significant growth downturn and higher inflation. All indicators of economic activity, international trade, construction, and manufacturing activities declined significantly. More granular data also show that business and consumer confidence and private sector credit growth, even though declined on a year-on-year basis, is beginning to show some modest gains. Policy and regulatory measures announced by the MPC in March and May have positioned the banking sector to withstand the shocks associated with the pandemic and to support businesses. These measures are working their way through the economy and are beginning to impact positively. So far, new advances for the first half of 2020 was estimated at 15.8 billion Ghana cedis compared to 12.1 billion in the same period last year. The central bank will continue to engage the banking industry to provide the necessary support in these challenging times. The committee noted that the COVID-19 pandemic has pushed public finances out of the path of fiscal consolidation. The fiscal deficit is expected to expand to 11.4% of GDP by close of the year. The huge financing gap brought about by the expanded deficit could exert pressure on debt with long-term implications for the economy. While government stimulus packages for various sectors of the economy, including micro, small, and medium-term enterprises, is in the right direction to boost economic activity, the committee's view was that going forward, the 2021 budget should be focused on instituting measures to return the fiscal consolidation path with a view to building resilience and strengthening the pillars of the economy for a return to stability. The Bank of Ghana's latest forecast shows that inflation is currently above its upper limit, driven mostly by food prices. Adjusting for the unusual noise in the food inflation, the indications are that underlying inflationary pressures are stable. The bank projects a return of inflation to the medium-term target band by the second quarter of 2021, conditional on corrective fiscal measures being introduced in the near term. The committee was of the view that the current extraordinary circumstances, with a widened budget deficit and residual financing gap, would require some monetary restraint to preserve the anchors of monetary and macroeconomic stability. In the circumstances, the committee decided to maintain the policy rate at 14.5%. Thank you. So over to you,
very much.
Yeah.
Yes, thank you very much, sir. Thank you very much for that. It's question time. So the media, if you want to ask any question, just raise your hand and we'll admit you. I can see Ni Abe already. Ni, come on, please ask your question. So Ni Abe, you have the floor.
Can you hear me?
Yes, we can.
Okay, so good morning, Mr. Governor. So when the finance minister appeared in Parliament on March 30th, one of the measures he mentioned as a means of cushioning the impact of the pandemic was the deferment in some interest payment on some non-marketable instruments, to which he said by 2022, this should save us some 1.2 billion cedis. And when I listened to the media budget review, there wasn't any mention of that. And so does that seek, or does that give us a suggestion that that did not materialize? So if it didn't materialize, can you give us an explanation why that thing did not work out? So that'll be the first question. And if there's a second one, probably I'll come up with a second one.
Okay, thank you. Obed Atayabo, I can see your hand up. Are you ready with your question? Obed.
Hello.
Hello, Obed.
Yes, good morning, MPC and Mr. Governor. Yeah. My question is in reference to the reforms. The minister mentioned that about 21 million cedis was spent on reforming the sector. As of this period, how much has been retrieved from the sector to compensate for that, Mr. Governor? And again, on the same banking sector, my little investigation or fact gathering shows that NIB is still undercapitalized. How true is that? And if they have been capitalized, how much have they been capitalized to? Thank you.
Thank you. George Viafi. George Viafi, I see your hand up. Okay.
Hello.
George, are you there? Yes.
Right. Here. Hello.
Okay. Okay.
Hello. Can I go ahead?
Yes, go ahead, George.
Okay. So, AC, a few questions, and Governor, good afternoon. First one, I'm just asking, I'm looking at your growth projections for the country. You were quite optimistic in your last meeting, projecting about 2.5% growth rate. The Ministry of Finance came out to project 0.9%. I want to find out, in terms of growth, are you still going with the initial 2%? Because if you look at the data again, it appears that the impact of COVID-19 on the economy might be greater or worse than we had actually initially projected. And what advice are you giving to government in this direction in terms of how the growth outlook is going to look like based on your own suggestions and the fact that the economic index and all the reports are showing to quite challenging times ahead of us? In terms of cushioning the banking sector against the shocks of COVID-19, are you going to look at additional measures, or you think that what you have put out is quite enough in terms of trying to or helping these banks to absorb the expected shocks of COVID-19 on the system?
All right, George, thank you. Thank you. Those were a few loaded questions. So we'll go back to Mr. Governor. You have one more. You can hold on till the next round. So, sir, we'll take your answers. Thank you.
Okay, thank you very much, AC. Let me start with the question on the growth projections, and to clarify that the Bank of Ghana also revised our growth projections downwards to around 9%, to around 0.9%, to align with what is in the budget. But I must tell you that I am a little bit more sanguine about the outlook for growth on the basis of the data that I have seen. If I look at the performance of exports, for example, you will see that even though total exports has gone down because we have, been impacted badly by the oil price, we are doing relatively well in terms of gold, and even in terms of gold volumes. We haven't done too badly. Similarly, if you look at the behavior of cocoa production this year hasn't been too bad either. And cocoa exports have also increased relative to a year ago, in spite of the pandemic. You could also look at the impact of remittances. We haven't seen a very sharp downturn in remittances, and the balance of payments outcome for 2020 as of half year has been flat. So we haven't seen a negative impact on the overall balance of payments as of half year on the basis of this pandemic. So yes, we've also revised our growth outlook to align with the budget at 0.9% of GDP, but I'm a little bit more positive in terms of the outlook. I think that we will do slightly better than that by the end of the year. Now, on your question of cushioning the banking sector, as we said, we think that it was almost as if we had a foresight of what was going to happen 3 years down the line when we started the reforms in the financial sector. So the banks have all been, in a sense, strengthened. I'm talking about the banking sector, well capitalized, and in that sense, performing more strongly. And we think that has helped them, in a sense, to be able to absorb some of the shocks that we are experiencing as a result of the pandemic. The banks have been able to restructure their loans, with more than 5,000 of their customers have had to go and had their loans restructured. Some of them had moratorium for up to a year. So we think that the measures that we have put into place, first, reducing the reserve requirements, has so far been positive. The banks have been able to also extend new advances, as we reported. If you look at the volume of new advances in 2020, it's higher than the volume of new advances in 2019, in spite of the pandemic. And therefore, we don't think that we need to put into place a new set of policies at this time. But we are in constant touch with the banks and reviewing the developments. And if there is a need to do so, we will not hesitate to do that by the next MPC. Now, the question from Nia Bay was interesting on the deferment of the non-market interest payments of the government to the Bank of Ghana. This was one of the ways in which the minister wanted to deal with the financing difficulties that he was having. And remember, this was announced before we purchased the COVID bond. So now that we are buying the bond from them, I'm not sure whether he needs to defer that non-interest payment, but we are still discussing, and this is something that we are still discussing with the Ministry of Finance. Then there was a question from Obed on the amount spent on the financial sector being about 21 billion and how much has been recovered. And I think the data that we have on total recoveries is around 2 billion Ghana cedis. As you know, the receivers are in courts with the shareholders and directors trying to retrieve the assets of these defunct institutions. And it takes time. The wheels of justice in this country grind slowly. So the process of recovery of these assets it's more complicated and it takes time. But hopefully we are confident that we will get there. Now, NIB, it's been almost a year or more since we concluded the recapitalization program for the banks. And between then and now, a lot of things have happened. So even though NIB, we had got, helping to recapitalize NIB, between now and then, there are a few more developments there which we are looking closely at. So that is the situation with NIB. I think these are the questions I have here. I don't know if I missed anything.
Yes, sir. That's right, sir. Thank you very much. We'll take the next round of questions. I can see Elom. Elom, are you ready?
Hello.
Elom, introduce yourself, please. Introduce yourself, your full name and media house.
Good afternoon, Mr. Governor and the team. My name is Elom Deseu. I write for Economic Times newspaper. And thank you very much for the opportunity. My first question is, you've maintained a policy rate at 14.5%. In the wake of interest rate trending down, when you look at the 91D, 180, the 2-year.
Hello. Elom, repeat that, please. I think you are lost for a moment. Can you repeat your question?
Okay. Yes, please. I'm just saying that you've maintained the policy rate at 14.5%, whilst interest rates were trending down. The 91D, the 182, and the 3-year, 2 to 3 year notes, they all trended down. And I just want to know what was the underlying effect. Is it because the government decided to increase the transportation fee by 15%, which of course is likely to add the non-food inflation, and the subsequent months we could see inflation rising? Is that the more reason why the policy rate was maintained? My second question has to do with, the budget deficit for end year. You said it's going to end the year by 11.4%. So are we considering that government, is Bank of Ghana considering that it's going to review the Banking Act to allow the governor to borrow more than 5% of the previous revenue to finance this particular budget deficit? My third question has to do with our public debt. When you look at our public debt now, it's 67.3% of GDP ratio. And when you look at the budget that was read by the finance minister, he said we're looking at raising around 100 billion for the Oba Tampa project, which as well is going to add up to this particular debt that we have. So my question has to do with, going forward, is our debt sustainable? Is it sustainable? Looking at, the kind of borrowing that we're going to encounter. And when you look at our gross international reserve, you said it's 9.2 billion, which translates into 4.3 months import cover. I just want to find out what accounted for this increase. Thank you very much.
All right, thank you, Elom. I'm not seeing any new hands. Let me invite in Niabe. Niabe started it all. Ni, introduce yourself, please.
Okay, so my name is Niabe. I work with Business 24 now. And I used to be with Business and Financial Times, then I moved to CTFM, and I'm with Business 24. Can I go another round?
Yes, go ahead.
Yes, so I'm looking at the CD, the depreciation of the CD. We are not doing a lot of exports, like the governor rightly stated. And in the medium term, I mean, getting to the end of the year and looking at how our economy is structured, what are the plans to ensure that we achieve a certain amount of stability in the currency? Thank you very much. I think that's all.
All right, thank you, Ni. I'm sure the governor would like to, take these questions, and then we'll have a last chance. Thank you.
Okay, thank you very much, AC. Let me start with Elom's questions on the policy rate being maintained at 14.5%, even though short-term interest rates have been coming down for some time. But if you look at the market very well, you would see that a lot of the medium-term instruments have also been crawling up during this period, in a sense, reflecting the fiscal pressures and the additional financing required for the budget. So this is really where the bulk of the transactions, in terms of the volume of financial transactions, take place. Now, the decision to keep the policy rate where it is reflects the sense of the committee that we needed to stay put where we were and see what the impact of all the recent developments will be in terms of our primary targets, which is the rate of inflation, and then obviously also to look at the impact on growth. So that was really the main reason why the policy rate was left where it was. You also asked a question, I'm not quite clear what you meant by about the budget deficit of 11.4%, which means that the financing will be higher than 5%. I think this is what you were saying, and the fiscal responsibility law, which I believe there is a plan to obtain a waiver for breaching that particular target. As you know, the Bank of Ghana has already set aside the memorandum of understanding that we have with the Ministry of Finance in order to accommodate the impact of the additional expenditures that have come about because of the COVID developments. The issue that you raised on the level of the public debt at 67%, I think that it's a critical one regarding the 100 billion Obatampa project. If you recollect, the minister mentioned that 70 billion of that will be provided by the private sector. So it's the government will just be looking for 30 billion financing for that particular project. But obviously, there is no doubt about the fact that if you're at 67% of GDP in terms of your debt stock, you are losing space. The additional space to accumulate more debt is dwindling, and there are issues of sustainability along the horizon. The gross international reserves at 9.3 billion. I think you know why. I mean, over this 6-month period, we've been to the capital market to raise money. The government has received funding from the IMF, the rapid facility for the COVID. And so we've had some inflows over the first half of the year, and that has also helped us to accumulate additional foreign exchange reserves. Now, Nia Behu is now with B24. I don't know where he will be moving next. He's been to Citibank, he's been everywhere. But yes, now your question is on the depreciation and the medium-term plans to keep the CD stable, which I think it's a very important question. You're asking about the medium-term sustainability of our balance of payment. This is really the question that you're asking. And as you can see, we are trying to, for the half-year period, we've had almost a zero balance. And we are hoping that we will be able to build some foreign exchange, additional foreign exchange by the end of this year. This is the target, is to build additional reserves of at least 300 million. My friend, the treasurer, is here. So this is really the essence of trying to build reserves. That should, improve our ability to have a reasonably stable currency. Obviously, the outcome also depends on the principal export earnings that we have as a country. You saw what happened to oil export receipts. If we do not see an improvement in revenues from oil, that will become more challenging. So those are the considerations. But your question is really an assessment of the medium-term balance of payments. It encompasses almost everything that we are trying to do. AC, over to you.
Yes, thank you very much. We'll take the last round of questions. And Edward Nyako, do you still have your question? Please introduce yourself. Thank you. Edward, we can't hear you.
This is the problem.
Is it okay now?
Yes, it's okay now.
Okay. The nominal figure of our debt poses a lot of concern. And I would like to find out from the governor, do we have any data about our debt accumulation rate? And going forward, by the end of the year, what are his projections in terms of our debt accumulation, looking at the freebies and that the government is giving? And then secondly, I interviewed the receiver and mentioned that about 96% of the customers have been paid. But you do hear a lot of, after these stories are aired, you hear a lot of reports indicating that people have not received their monies, especially those who from the end of a GN Bank in particular. What is the report that the governor has received in terms of the payment, even though it's under the receiver's end?
All right, thank you, Edward. That's Edward Nyako of GTV. Atonam say TV3. Atonam, you have a question? Atonam say. Hello, Atonam.
What is the GDP debt projection?
Okay, let's go to Joshua.
Atonam,
okay, go ahead. Yes, introduce yourself, Atonam.
Good afternoon. I'm Atonam, I report for TV3. So I have three questions. My first one will be, I don't know if I got the explanation for why the $1 billion decline in the reserves, as in the gross FX reserve, and also whether we got the $1 billion repo reserve with the US Fed, whether it came through as expected. I also want to ask the fiscal slippages from 4.7%, we are now at 11.4%. I wanted to ask, with a difference of 6.7%, do you feel threatened as Bank of Ghana by the fiscal slippages? Is government worried about the excessive expenditure, especially in an election year? Do you think this threatens your inflation targeting? And my very last question will be, at the last MPC, governor mentioned is the fact that there was going to be some support for local businesses, especially in times like this of COVID-19. I asked the governor whether or not there's a cost to it, and he says no, they're not going to be engaging the banks and there's no cost to it. Do we know how much it's going to cost us and whether banks have started receiving such support and which banks, please? Thank you.
Thank you, Etonam. I'm Joshua from Gold Street. Joshua, are you ready? Let's hear you, Joshua.
Today's date?
Joshua, are you there?
Yeah, I'm here.
Okay, go ahead, please. Introduce yourself.
This is Joshua from Gold Street Business. 3 months into the implementation of the Global Master Repurchase Agreement, which was launched last year, I want to find out what has been the effect on the monetary policy transmission, as well as its impact so far on the secondary market. Thank you.
Okay, thank you. Thank you. Well, I think I see a few more hands. That's the last round. So if you've had a 10, I may have to skip you. Obed, okay, let's hear Obed. Obed, briefly, go straight to your question, please. Thank you.
Sure. Please, Governor, you indicated at the last MPC meeting that you are supporting, the bank is supporting government with 10 billion cedis. Looking at how the fiscal situation has widened now, has the bank planned to top up that money and how much?
Okay, thank you. George Riafe, do you still have your question? George Riafe. Hello, George. George Riafe.
Hello, can you hear me?
Yes, yes. Go ahead, please.
So, Governor, recently, it looks like your financial sector division came out with a report where you were raising concerns about the mobile money fraud that has hit the banks, and you outlined some modalities to help check it. Do you think that these measures are enough to still guard against these things? And you think that it's getting out of hand and more measures need to be put in place to protect the banking system from these fraud that is actually, that could, some might say, that impact on confidence in the sector? And also with respect to the
Hello, George. Oh, okay, George, we might have to skip you. There's a new hand, so we'll go to Yinka. Yinka, are you there? And that will be the last question from Yinka. Yinka, are you there?
Yes, I'm here.
Okay.
Yes, thank you. Governor,
Let us know who you are. Introduce yourself, please. Which media house you are representing?
I represent Bloomberg News. And
okay.
My question is about the $300 million of reserves that the Bank of Ghana plans to build to stabilize the CD. Could we get more details about how you plan to build those reserves and over what period of time? Thank you.
All right, thank you. And thank you very much. You can take the questions now. This is the last round, so no more questions will be taken. Thank you.
Okay, thank you very much, AC, for this batch of questions. I'll start with, I believe, Edward, who was asking about the issue of debt accumulation and GTV and the recent announcements by the Minister for Finance. I think you're right. I mean, as I said, if you have a debt GDP ratio of 67%, you are getting to the frontiers of sustainability, and therefore the space to incur additional debt, gets reduced very sharply. So yes, there is a need to relook at that in terms of the pace of accumulation of debt. But also remember that this is a ratio. It depends on what you use the debt for. If you are able to use, the proceeds of debt more effectively to help improve growth, then you should be able to, see the debt to GDP ratio declining over time. So yes, Ghana's debt to GDP ratio is at a very high level, but if we are able to use the new debt that we accumulate effectively to, improve growth, then we would be able to create more space for that. And you were asking about your meeting with the receiver and the information that came out regarding the settlements, that more than 96% of all depositors have been paid. I mean, this is really the structure of depositors in the SDI sector. Most of the depositors in the SDI sector are small depositors, people with balances that are below 10,000 cedis are in the majority. So more than 96% of depositors in the entire sector have been settled. It means that the 4%, those that have balances in excess of 20,000, 50,000 or more, are just about 4 or 5% of the population of depositors in the SDI sector. Now, we know that the sectors such as GN Bank and First Allied Bank had some issues regarding the court cases which delayed payments. But I understand that most of the depositors are either being paid down or have been paid. So that issue regarding GN Bank and First Allied has been or is being resolved. Now, Etonam asked a question about reserves, a decline of $1 billion in reserves. And I think that's a very good observation on her part, because most of the assessments have been looking at the end of year, end of 2019 relative to now. But I think she's looking at where we peaked. And I think we peaked somewhere in March or so, where we were around $10 billion or more. So yes, if you look at it in terms of where we peaked, we have lost $1 billion. And it tells you the pressures that we have in the economy in terms of payments, external payments that have to be made over this short period of time. We've received a lot of resources in the first half of the year, but the outflows have also been very significant. If you look at the outstanding payments of non-resident bonds, maturities that we have seen over the first half of this year, they have been quite heavy. And this is really a question of the net inflow, which really matters at this stage. And then I think she also asked about whether we were worried about the fiscal. I think the answer to that is we all recognize that we are in extraordinary times with the impact of the COVID, and important measures have to be taken by the government to protect all of us. So these are very important and necessary expenditures that have been implemented. The concern has to do with the longer term and the ability to sustain this over a longer period. And therefore we are, for example, saying that maybe in looking at the budget for 2021, we need to recalibrate the fiscal a little bit more to look at the issues of sustainability and stability. But for this year, I don't think anybody, questions the necessity behind the expenditures that we're undertaking to help protect you and I from this dreadful pandemic. Now, the next question was from Joshua Gold Street about the JIMRA. And I can tell you that from what we have seen, the JIMRA has led to a fairly robust increase in secondary market activity in terms of the fixed income instruments. And that should help in terms of helping the improvement of our monetary policy signaling. The next question, I'm not sure if it's from Joshua, but this was on supporting budget with another 10 billion. I think that was the question. That is not the plan for the Bank of Ghana. We have already announced that we intended to buy a COVID-19 budget of up to 10 billion cedis, 5.5 billion of which has been disbursed, and therefore there is an outstanding balance of 4.5 billion to be disbursed by the end of this year. The total amount, however, will remain unchanged. Yes, on this issue of MOMO, and I think that we are asking banks to be vigilant to strengthen their internal controls. If you look at the report that the department put out, this was a scheme which involved some of the bank's own staff. Some of the bank's own staff collaborating with fraudsters in order to use this MOMO as a way of making money. And it's important that the banks carry out the due diligence in terms of this type of staff that they employ in their institutions. We are also taking the issue of cybersecurity very seriously. Bank of Ghana is implementing a financial sector SOC, Security Operations Center, which will be looking at these issues of cybersecurity for the entire financial sector. Then the last question again, which I have from Yinka. We're coming back to the issue of what the bank will do to build reserves at the end of the day. As I said, if you look at that issue broadly, we are looking at the sustainability of our balance of payments. These are the inflows and outflows that come into the Ghanaian economy as a whole. On the medium to longer term basis, we need to look at our exports and be able to diversify exports so that we'll be able to, as a country, improve our export earnings capacity. At the same time, if we could improve domestic production so that as a country, we can reduce our reliance on imports. All of that would help us as a country to be able to have more reserves. Now, broadly at the central bank, we have our tools also in terms of monetary policy, which would have impact the flows of capital, which would also help us to build foreign exchange reserves. So there are many factors that go into it. At Bank of Ghana, we are managing the inflows and outflows on a daily basis and ensuring that we would be able to, at the end of the year, manage it in such a way that we would make some savings. This is really the policy. I hope I've been able to get all the questions. I don't see any here which hasn't been.
Yes, sir. I think you've exhausted the questions. So. Thank you.
Thank you very much, AC.
Yes, thank you very much, sir. Yes, sir. Thank you very much.
Thank you.
Yes, thank you very much. Thank you very much, sir.